And I wanted to take just a few minutes this afternoon to talk just a moment about my perspective on not only the legislation that Senator Warren had put out for discussion, but really the concerns that so many in this country have when it comes to the issue of student loan debt. I'm the mom of a recent college graduate. Our number 2 son is going to be entering his senior year of college, so we're fully embroiled as parents in kind of the understanding as to what the current costs of a college education are, what young students go through in order to achieve their dreams of going to college, and the struggles then as they face the reality of moving into a working world, but starting off saddled with debt that can be almost breathtaking for them. In addition to being a mom of kids in this generation, I'm also a former commissioner of the Alaska Commission on Post-Secondary Education. This is Alaska's state agency lender. And so I'm coming at the issue wearing a couple different hats today. I know full well that people are discussing the issue of high cost of college, of student loan debt, and not just doing it here on the floor of the Senate, but talking about it around their kitchen tables. They are very concerned about the cost of college and the burden that the debt then places on our young Americans. Young people who are just starting out after college graduation have an average debt of about $27,000. Now, some would say, well, $27,000, that's manageable. That's about in the range of what you may take on as if you're purchasing a new car. But think about it, Madam President. If you're a young person just out of college, and you're starting to make those initial payments, $27,000 can be a staggering amount. And whether you talk to the young people who are working your phones either in your state office or here, the young interns that I have that again are excited about the prospects of going to college or are in the midst of college or who have just graduated from college, some of that excitement and that enthusiasm dims when they realize what it is that they are taking on. So this debt is daunting. And keep in mind that debt then that you're facing assumes that you've got the means to be paying it back. There's so many of our young people, of course, that cannot find that job. The 18 to 24-year-old age bracket, the unemployment rate is twice the national average. For those that are graduating with a master's or a doctorate, of course, the debt burden is much more. And then the parents, the families that have taken out the loans to help put their kids through college, the many families that are also struggling. So this is something that families are talking about around their dinner table. And I'm hearing about this from parents, from high school and college students in Alaska, again, talking with my interns here, and they all say the same thing. They're all concerned. They're all concerned about the cost of college and job training and the debt that they're going to incur and their ability then to move forward, whether it is to buy that first car, whether it is to purchase a home, just the decisions about getting married, starting a family. The debt has an impact, and that is absolutely a given. I do think it is important to know that we here in Congress have not turned a blind eye to this, that we have been working over the years to help address the costs. The College Cost Reduction and Access Act and the Higher Education Opportunity Act, these were measures that I worked to craft some years ago, but they address these issues in many ways. We created income-based repayment and public service loan forgiveness. There was active duty military loan deferment, graduate student eligibility for income contingent repayment, interest rate reductions, Pell Grant increases, TEACH grants, automatic zero expected family contribution for low-income families, and much more. We improved student service programs like TRIO. We helped ensure that students and parents have access to the kind of information that they need to ensure that they really do get top dollar for their education dollars, and also to help students then persist in college to complete that process, to earn the degree. We required counseling for federal loan borrowers prior to students' graduation about repayment plans, about debt management, loan forgiveness, consequences of default, tax benefits, and more. We also required disclosure about the terms and condition of federal family education loan programs. These are the FFEL loan programs before the loans are disbursed, before repayment, and during repayment. And then recently, Congress has supported Pay As You Earn and other programs, and just last year enacted a new interest rate structure to protect both students and taxpayers. But unfortunately, we haven't seen much out of the administration to make Americans aware that these opportunities actually exist, that they are in law. We heard a nominee for a senior policy position at the U.S. Department of Education who tried to justify this lack of action by saying that the provisions were just enacted recently. But, Madam President, 7 years ago is not recent when it comes to helping Americans understand their many loan repayment options. Just this week, we heard the President, who gave the Department of Education yet another 6 months to figure out how to tell Americans about their loan repayment options. I think that we can do better than this. I heard just last week a young teacher who was testifying before a Senate committee. She said she was completely unaware of the income-based repayment program, which could have saved her about $4,000. Instead, with her unaffordably high loan payments, she basically defaulted on her loan. So these again, it's important that when we put measures in place that we do make sure that education effort is there on the back end so people understand and can take advantage of some of these initiatives that will help to make a difference. Now, obviously, we do not have the Warren legislation in front of us for consideration. I'm certain that it will be a matter that will be brought back before the Senate. I certainly would hope that we would have extended debate about what we as a Senate can be doing to help our young people as they deal with the burden of college debt, of job training debt, and what we can do to ensure that they are well on their way to good, strong careers. But I wanted to raise just a couple issues that presented themselves with the legislation that Senator Warren had put out on the floor, because they speak to a program in my state that has considerable impact. Madam President, I know that I was scheduled to speak, I think, for about 15 minutes this afternoon, and I've got another colleague that is on the floor. I would ask for about another 5 minutes, if that is acceptable with my colleague and with the chair.
Without objection.
Okay. Thank you, and I thank my friend from Ohio. First, I would like to bring up the issue of the Alaska State Student Aid Agency. The Alaska Commission on Post-Secondary Education, we call it ACPE. It's funded by the Alaska Student Loan Corporation. It's a public corporation of the state of Alaska, and it is an agency that originates federal loans under the old Federal Family Education Loan Program, FFEL, and for 40 years it's originated state loans. Now, before you dismiss ACPE as just another private lender, let me tell you what this agency does. It's the Alaska Agency for Authorizing and Investigating Institutions of Higher Education. They provide consumer protection for Alaskans. They gather student data to inform policymakers so that we know what policies and practices are working, where improvements necessary. They manage the state's performance scholarships and education grants, which provide both merit and need-based grants to students for post-secondary ed. They create and manage college readiness or job training programs and help them to figure out how to afford it. So effectively, what ACPE does is they promote access to and success in high-quality post-secondary education and job training for thousands of Alaskans as well as non-Alaskans who are attending Alaska schools. But they also have a special emphasis on outreach to groups that are underrepresented in post-secondary ed. They do such a great job for us in the state that when late Senator Ted Kennedy was here, he insisted on creating the College Access Challenge Grant Program to expand what ACPE had been doing for all these years. But the measure that Senator Warren had, the Bank on Students Emergency Loan Refinancing Act, would potentially put these programs in peril and potentially end them. It would incentivize borrowers who borrow their FFEL loans and their state loans through ACPE to refinance. But because this opportunity would only be available to borrowers in good standing on their state loans, it would leave ACPE with only the poorest performing and the lowest credit quality loans within its portfolio, leaving behind the borrowers who are the ones that the sponsors of the bill say that we really need to help so much. The loss of the FFEL loans would be bad enough, but here's another problem. State student financial aid loans were financed by Alaska Student Loan Corporation through long-term fixed-rate revenue bond issues. These have very restrictive terms with respect to paying them off before their scheduled maturity dates, and the impact on these partner state agencies and the Alaskans that they serve and to the corporation's bond rating of having a large percentage of state student loan volume prepaid through the refinancing bill could be severe. The money the Treasury would pay ACPE for those loans could not be used to pay off the bonds early, nor could it be reinvested at anywhere near the interest rate on the outstanding bonds. The value of the bonds exceeds $65 million, but it's not only the cost to the agency and its ability to function. Whether the state corporation were to default or to perhaps go to the legislature for a bailout, these consequences are not good. Either situation would be toxic for the Alaska Student Loan Corporation in terms of subsequently being able to issue bonds that really would be palatable to any investor. In addition to the risk of default or a hefty bill placed on the state and being labeled a toxic risk to bond issuers, the combined loss of income across both old FFEL program loans and state loans could very well leave ACPE unable to continue to perform any of the services that I think it performs really quite well. Madam Chairman and Madam President, this is not the only issue that I have as it relates to what we had before us this week. We all know we don't want our students, our young people, to be struggling when it comes to debt. We have to be working together to try to find these solutions that truly are helpful across the spectrum. One of the problems that we noted, though, was that the bill would prohibit Americans who have private loans from banks or state agencies and who are having trouble paying as agreed to finance to a lower rate, a prohibition that does not extend to those who are having trouble paying their direct and their FFEL loans. And I can't understand why we would treat Americans differently based on the kind of debt that they have. The sponsors of the bill, I think, genuinely want to help struggling borrowers, but with this provision, they leave a lot of folks out in the cold. So that is something that needs to be addressed. According to the Center on Budget and Policy Priorities, the cost of college is going up, but state funding for higher education, which went down during the recession, is not rebounding. We're seeing exceptions in Alaska and North Dakota. But according to the CBPP, Louisiana is at the top of the list. They contribute a little over $5,000 per student less to higher education than they did prior to fiscal year 08. In Hawaii, New Mexico, and Alabama, we're seeing $4,000 less per student range. Idaho, South Carolina, Massachusetts, Nevada, Connecticut, Arizona, and $3,000 less per student range. The list goes on. So, Madam President, when states are unable to contribute to their public universities and to post-secondary education in general, the cost burden then for our students too often goes up. And even when our colleges tighten their belts and cut their internal costs, we see the costs rise. So, Madam President, obviously a great deal to do. I know that so many of my colleagues are committed to working to find that good solution, that solution that works not only for students in my state, but around the entire country. We have our work cut out for us. I appreciate the efforts that many have made. I think the discussion will continue, and I look forward to that.